I saw those properties grow and provide passive income to me, which it's semi-passive because I actually was property managing, but those checks coming in, I started to learn really quickly that real estate was a great way to build wealth and a great way to, unlike the stock market, you're not getting checks every month. Someone's not paying a mortgage that you have off. And so I started learning that this building wealth through real estate was really a great opportunity. And I have a passion for it.
Welcome to the Wealth Through Real Estate Investing podcast, your source for real-world strategies focused on creating long-term wealth, cash flow, and financial freedom through real estate. Through guidance, tips, and stories of highly successful real estate investors and thought leaders, we provide you the tools to succeed and reach the lifestyle you always wanted. And now your host, Dwaine Clarke.
Hello and welcome to the Wealth Through Real Estate Investing podcast. This is your host, Dwaine Clarke. And today we have Stephanie Wankel. She is a real estate investor with over 10 years experience and founder of New Heights Investment Group, where she connects investors to real estate syndication opportunities. She has spent several decades in software product development, as well as actively growing her real estate portfolio. How you doing, Stephanie? And thank you for and welcome to the show.
Thank you.
Yeah, I really appreciate it. I understand you are in Colorado. It is a little early in the day there, and I'm on the East Coast, and it's 11:30 our time. So I really appreciate you taking the time to talk to our listeners today.
Very great. Yeah.
Awesome. So I understand that you're out there. You have a podcast. You're actively involved in real estate. But for people who are not familiar with your background, would you just mind telling us a little bit about your background and how did you get started in real estate?
Sure. As you mentioned, I've been in product development in the software space for over 25 years, and I have been a real estate investor for about 12 years. I fell into it, basically started like a lot of people by buying single family properties and renting them out here in the Colorado area, and grew a portfolio and basically managed that myself. So I was the property manager, which if you haven't, is very heavy intensive, right? It's basically another job.
Mm-hmm.
And not in my estimation, not a very fun job. But I saw those properties grow and provide passive income to me, which it's semi-passive because I actually was property managing, but those checks coming in, I started to learn really quickly that real estate was a great way to build wealth and a great way to, unlike the stock market, you're not getting checks every month. Someone's not paying a mortgage that you have off. And so I started learning that this building wealth through real estate was really a great opportunity. And I have a passion for it. So I maintained those properties, and then over the course of time, they grew in equity, and the Colorado real estate market became less lucrative as far as cash flows. And I started learning about investing out of state and how do I take my equity that I have built over the years and disperse that to buy more properties and have more income. And along the way, I learned that hiring property managers affords you the ability to have more passive income, so that you obviously have to manage those property managers, but you're not in the day-to-day, and you're literally just getting mailbox checks. And so I grew to now I have 10 doors, single family, duplex, triplex in different areas throughout the country. And as I wanted to scale and grow that, I kind of did some math. I'm like, I want 100 doors. That's how many I want. Well, for anyone who's purchased a property personally, you have to get all your finances together. You have to do all of this heavy lifting to buy a property to get this passive income. And that's when I started to learn about apartments, and you have multiple doors under one roof. You really limit your risk. You're not taking a huge hit when the property turns over and tenants move. And I learned of all the benefits to getting into multiple doors, which is apartments, self-storage, multifamily. Basically, it's commercial lending. It's different, and to me was the next step to kind of scale my real estate ventures. So that's when I got into learning about apartments and partnering with people that have experience in buying large apartment buildings, and partnering with them to help other investors invest in large apartments and get this passive income that I have learned to really enjoy.
Yeah, I love your your transition, how you kind of start out with your own personal portfolio, managing it, and then kind of transitioning and going out of state, and then now going to kind of the larger syndication model. That's really good story. That actual transition, did you have any education like seminars or mentors that helped you kind of bridge the gap, or are you more just hands on? You just kind of learned it on your way?
I would say both. So when I started researching getting into apartments, I realized it's pretty different. The financing is different. Anyone can go buy a single family home, but with apartments, you really have to leverage brokers and you have to have relationships. And again, the math is different. The figuring out, if it's a lucrative opportunity for you or not was different. And so I did do a lot of the apartment kind of boot camps and seminars. And I also hired a coach who's in that space, and actually hired several coaches. Actually, one just learning about apartments, and also he was very focused on mindset. So as you're doing these kind of big moves in your life, fear props up. The mindset to being successful is really key to keeping yourself going and persevering through what seems to be struggles and challenges. And so this coach, although also in the investing space, really was focused on mindset. And that was very helpful. And then through this group, I also met other investors and really started to network, and then start self-learning and learning through partnerships how this business worked.
That's beautiful, because I liked how you kind of went out and sought the best in that industry, and said, let me just pick their brain, learn from their experiences, their failures, in order to catapult your business. If you think about traditional education, where we paying tens of thousands of dollars to go to school to achieve a degree, to go into a specialized industry, it's the same process that you went into in order to kind of make your business successful. And now you're dealing with investors. So now you bring in all that experience and education that can formulate to make a really good deal. So that's really, really great. Kind of moving on to your investment criteria for your company. Is there a particular focus? I know that you specialize in multifamily, or are you looking at other assets as well?
Yeah, so I focus on multifamily apartments and self-storage. And basically criteria I look for when I talked about moving my personal portfolio out of state. I really look for areas where job growth is high, population growth is high. They're not as cyclical as a market like maybe the East Coast or the West Coast, and actually here in Colorado, where you get these big appreciation and then risk for kind of a bigger drop. So more stable kind of markets where cash flow can just keep coming in at a more stable rate. So that's what I look for. When I'm doing an actual deal, I heavily vet the operators of these apartments. So when you get out in the space and you talk to people and you're like, I bring investors to deals, people that are in the space that are buying apartments really want you to come help, bring investors investors to their deals. And I'm very, very cautious around who I partner with. I really focus on those people that have a track record, that have bought and sold a lot of multifamily. And the reason being is you can get a good deal. I mean, it's actually not easy to get a good apartment deal, but you could make that barrier. But where an investor's money is protected is on how the business plan is executed. So if they don't have a strong property manager and they don't actually have the plan that they can execute to increase rents or cut expenses or whatever they say they're going to do in the business plan, then the investor's money is not protected. And I'm connecting my friends and my family to these investors and everyone. And I want to make sure that they're, nothing's safe. The world can change, but I want to make sure it's as safe as it possibly can be. So I highly vet any sponsor that I work with getting into this space.
Yeah, that's very key. Like I said, you had mentioned the track record, implementing their business plan, because they can get into a deal and maybe make one of them work, but then having multiple deals and having a track record where people can see like, okay, this plan actually worked. We're talking about families, money, personal relationships. So it's very important. We have a fiduciary's responsibility to kind of make sure that it's at least in the right direction there. You had mentioned something can change, so that's very key. As far as working with sponsors, how did you kind of start the process of building relationships with them, finding them, and then ultimately partnering with them on some level?
So the network, the mentoring kind of network that I just mentioned previously, as part of getting in with those people and networking and meeting people, that's how I started to meet, operators that have been in the space a long time and kind of network and really learn more about them and build those relationships. So I feel comfortable putting investors with them. And I do keep it very small. So a handful of sponsors that I work with, and I will venture out and maybe look at different asset classes, but in the same way, a very cautionary, take time to build. And again, track record is super important to me.
Mm-hmm. As far as like finding investors, what are some tips for new syndicators or people like yourself? How are you finding investors?
I think just, putting yourself out there, which can be uncomfortable for people, but people that are going to basically give you their money to invest need to feel confident that you know what you're doing and that you know what you're doing, that you're kind of a thought leader in the space. So you can do that by writing blogs like you're doing with a podcast, which I also do, different ways to help people to hear from you so that they can know you, like you, and feel comfortable investing with you.
Mm. Do you also do anything particular, like, like you mentioned podcasting and writing blogs? Do you do meetups and stuff like that locally?
Yeah, so we have a lot of meetups locally. We have a pretty strong apartment meetup that I attend regularly. I know a lot of people that are also trying to attract investors start their own meetups, which is a great way to do that. And I don't personally have that yet, but I definitely attend a lot of those kind of local events.
Yeah, it's good kind of connecting people, seeing, face to face other investors and bringing other thought leaders in there and kind of learning. It's just kind of like a good group to kind of, break the ice and also to kind of learn about new opportunities. Is that the same for meeting new potential sponsors and other, co-partners as well?
Definitely. And I think, I'm in this space, but I definitely don't know everything. So, I approach all of those kinds of things in a way, an intention to learn, which I always do. There's something you can learn from everybody with less experience, more experience. And so I kind of approach those networking opportunities as ways to learn and hopefully maybe help other people along the way. But as part of it, you meet potential investors, you meet people that are also just really into real estate like you are. And we like to geek out and talk about all of these topics. And that's really fun too.
Mhm.
So you're learning, you're getting opportunities and you're meeting investors and you're meeting potential deals because you never know whom you might meet, but you're also meeting with like-minded people, which is really fun.
Mm. Well, what would you say give some advice for some of the listeners on the call regarding maybe some mistakes or stuff that you could have done differently? I know that you've been involved in a whole bunch of different stuff, far as your own portfolio and your experience, and now moving up to kind of larger deal structures. Is there any tips you can give for some newer people that you can maybe they can avoid or mitigate if regarding their business?
Well, I think so. My story is kind of long and plotted out, which is great. I'm very grateful for that. I've learned along the way, but you don't have to have that story. You don't. I meet a lot of investors that feel like they have to buy a single family rental to start out, like that they need that experience to jump into maybe, let's say, multifamily or some other investment, and you don't have to go that path. You can learn just like I did. You can meet other people, and sometimes that means investing with mentors, and you can speed up your learning on a particular thing, and you don't have to go a prescribed route. And so I meet a lot of people that want to get into real estate and they're seeking a mentor, but they don't want to invest any money, basically. And sometimes you have to look at it differently, and you're investing in your education and your networking. So you're investing in the people that you know. I don't know who said it, but you're like the five most people you hang around with. That is so true. So if you're hanging around your cousin and your whatever, then you may not be learning everything you need to learn to meet your goals. But if you put an investment in to hang around people that are doing whatever you're interested in real estate, you're going to, just by nature being around them and part of those conversations, learn more. So I think being open to mentorship and investing in yourself is really important.
I love that a lot. Yeah, that's absolutely true. And I've done that personally. So I definitely synchronize with you there. So what are some of your future goals of the business? Is it continuously to kind of look for good opportunities in the multifamily and self-storage space, or what's some other stuff that you're looking at doing?
So I continually grow my portfolio. Both, a lot of people in multifamily ditch the single family and do only multifamily, but I really like both for different reasons. So I continue to build my entire portfolio and build relationships on the multifamily side so that there's deal flow and opportunities for my investors. But one area I'm really passionate about right now is that as I meet people, there's a lot of people that really have a passion to get into real estate, but they're not accredited investors. And what that term means is basically at a certain income level that is required by the SEC to participate in a lot of the investments that I offer investors. And so I'm going to be expanding different opportunities to help real estate investors that want to get into it that may not yet be at that accredited status. So that's been somewhat disappointing for me along the way as I meet people like at meetups or whatnot, and they're really excited about real estate and they don't know how to get started, but I can help them by sharing, my experiences, but I can't actually help them with some of the opportunities that I offer. So that's an area that I really want to branch out in.
I like that your approach is all about helping, kind of giving back, kind of help other investors and other people like yourself to move up into the business. And that's kind of transitioning to my next question of your podcast, where you're just offering a lot of personal stories, getting on interesting guests, and offering a lot of content. Can you tell us a little bit about your show and what people can learn from it?
Sure. So my podcast is Frenzied to Financial Freedom, and I have a co-host who is very interested in real estate, but she's a newbie. And so it's a great perspective because she wants to know everything about it, like many of our guests. And I have some more experiences. So we are focused on women that really seek to get away from kind of their frenzied life and pursue other opportunities toward financial freedom. And I'm a huge believer that passive real estate investing brings freedom. And so we interview a lot of women real estate people, but we also interview a lot of women that have side hustles or other entrepreneurial businesses that also afford them freedom, so that we're really not just focused on real estate, but really branching out. How can all women, regardless of where you are in your season of life, look to give yourself less frenzy and more freedom? And so we target women guests and women listeners. Now, obviously, anyone can listen, but what we're really trying to reach is women doing things that can help them grow in a personal development way and or a financial way.
I like that you're kind of building a little community there and offering, stuff for all women to move up and do different things to achieve financial freedom. So that's awesome. What's kind of like a typical day for you when you're not working on your business? I know, everyone has a life, so I'm just, curious to share that with the listeners.
So I have two kids. I have a 21-year-old son who lives at home and goes to college near our home. And he is very passionate about real estate, and he does a lot with the business with me. We travel and look at properties, and he's very involved in that. He wants that to be his life. He sees the financial freedom in it and doesn't want to be tied down to a career in a corporate office. And so he's trying to figure out what aspect of this real estate kind of lifestyle does he want. Then I have an 18-year-old daughter who just graduated high school and is moving to college in August. And so, we're doing a lot around that life transition. And myself personally, I live in Colorado. I'm a skier and a hiker. I like all things outdoors. I have a great friend and family network that I love to spend time with. So those are kind of the things that I like to do when I'm not either at my W-2 job or, doing my business, which my business is also just my passion and my heart. So it doesn't really feel like work. But trying to keep a balanced life.
That's nice. So what's kind of like a typical morning routine? Do you have anything special that you do that kind of get going?
I do. So I'm a big Hal Elrod fan. I don't know if you've heard of the book Miracle Morning. I'm in a mastermind community with that group. And so I have a mastermind group. And it all started from reading that book, Miracle Morning. And I basically practice what that book outlines, which he calls them the savers. But basically you wake up early. I wake up at 5:30, and you do a process of affirmations and meditation and, looking over your plan for the day and for the week, things that I do on a regular basis. And I will fully admit, I try to do that every day, the full hour long thing. And when I do that, my day is much better. My week is much better in the way that I'm more focused and less distracted. But even when I can't, for whatever reason, fit in the full thing, just getting up and doing something, even if it's reading 5 pages or doing something that fills me up and gives me focus on the things that matter to me, I find to be very helpful. So I'm a huge proponent of morning routines. It has changed my life. And in any way anyone tries to implement it, it helps us, because all of us get so distracted by our phones. I mean, in a good way, our family, if you're an entrepreneur, you're busy, and it's just helpful to keep your mind on why you're doing things so that you do the things that help you with your why and don't do the things that don't.
Yeah, that's beautiful. You had mentioned about your kids and you're close to your family. Is there anything else that you're grateful for as well?
Oh, I am super grateful for, for all the opportunities that are out there that are afforded to all of us. And along the way, all the different people you meet, not just, people that you might pair up with for business dealings, but all of the humans that have so much to offer in the way of their life experiences and who they are. And that just has really, I'm so grateful for, connecting and meeting so many different people. That has really helped me grow as a person.
Yeah, it was great to speak with you and kind of learning more about you and your business. And how do our listeners get in touch with you?
My website is newheightsinvestmentgroup.com. And then you can, of course, check out our podcast on Frenzied to Financial Freedom podcast on iTunes and Stitcher and all the other places that you go for your podcasts.
Awesome. Stephanie, it was awesome to speak with you, learning more about you, your business, your goals, and kind of giving us some tips on how to become a successful syndicator investor. I really appreciate you taking the time and look forward to connect with you again soon.
Thank you.
Take care.
Thanks for joining us on this episode of the Wealth Through Real Estate Investing podcast. Don't forget to subscribe and leave us a review on iTunes or the listening platform of your choice. Also, please check us out at DwaineLClarke.com, as well as find us on Facebook for more useful content and resources.